Good afternoon, everyone, and welcome to Salasar Techno Engineering Limited's earnings conference call for the second quarter and half year ended 30th September 2018. I would like to begin by expressing my gratitude to all of you for taking the time out to join us today. On the call with me is Mr. Kamlesh Sharma, the Chief Financial Officer, and Mr. Manish Agrawal, GM Corporate Finance of the company, and Bridge IR, our investor relation team. Before we get into the financial and business performance for the quarter and half year and the 30th September 2018, I would like to start by giving you a short overview about the company. Our journey began in 2006 as a telecom tower manufacturer, and over the years we have successfully diversified our business into other verticals and are expanding our operations in various parts of India and around the globe. As on date, we have supplied more than 30,000 telecom towers since our inception and expect growth to remain strong and gain further pace with increased participation opportunities. We have constantly innovated to provide efficient solutions. Our excellent execution capabilities have helped us gain the trust of our clients. This is evident from our strong repeat orders from our customers and clients all across the board. I would like to thank the entire team of Salasar Techno Engineering Limited for their untiring efforts, hard work, sincerity, and dedication in driving the company to where it is today. Coming to our consolidated financials for the quarter and half year ended 30th September 2018. These numbers are in line with India accounting standards, that is in AS guidelines. Coming to financial highlights for the second quarter. Our focus has always been on improving overall business, and this can be seen in our performance. Our company registered a revenue of 154 crores with a year-on-year growth of 54% from 99.58 crore in the same quarter last year. The growth is driven across all segments and majorly from telecom segment and railway track electrification segments. The EBITDA, which was at rupees 17 crores in Q2 19, increased by 51% as compared to over rupees 11 crores in Q2 18 on account of operational efficiencies and despite increase in steel prices. It's mainly because of the volume increase. The net profit for Q2 FY19 was rupees 8 crores as compared to rupees 5.6 crores in Q2 FY18. This represents a growth of over 42% year-on-year. Q2 FY19 EPS stood at 5.97 rupees versus rupees 4.57 in Q2 FY18, representing a growth of 31%. And our H1 FY19 revenue stood at 317 crores with a year-on-year growth of 46% compared to rupees 216.7 crores in H1 FY18. The growth was driven by timely execution of orders across all business segments. Our EBITDA stood at rupees 34 crores, representing a growth of 48% as compared to 23.23 crores in H1 FY18. H1 FY18 EBITDA margins stood at 10.82%. The profit after tax was at rupees 6.85 crores versus rupees 11.7 crores in H1 FY18, representing a growth of 44%. Overall, we see good demand in the industry and our focus remains on increasing our market share and providing quality product and services to our client. As I had mentioned, we have a technical collaboration with Rambo, a Danish company, which has enabled us to emerge as one of the key players in manufacturing and fabrication of telecom towers. This collaboration has helped us provide customers better designs and less bulky towers. We are a preferred telecom tower supplier for all major telecom companies and enjoy a sizable share in the market. The total installed capacity today stands at about 1 lakh metric tons per annum, and offering of the company include steel fabrication and infrastructure solutions for telecom towers, transmission line towers, substation structures, solar module mounting structures. We also manufacture and provide utility poles to our customers for different uses, such as high mast poles, smart city poles, stadium lighting poles. We are an approved vendor with Power Grid Corporation of India as well. Overall, the business can be classified into 4 verticals: telecom towers, transmission, which can further be divided into EPC projects, turnkey projects, railway track electrification, and supply of railway track electrification structures to other EPC contractors. Third is solar module mounted structures, and the fourth is utility poles. As an ongoing endeavor to enrich our product mix, we have been approved by CORE, the Central Organization for Railway Electrification, to supply railway track electrification structures to other EPC contractors as well. The company is gearing up to sharpen its focus on railway electrification and intends to increase bidding for such projects. We have started building capacities and training our manpower to handle all railway-related projects. The sector continues to witness uptick in both ordering and execution of the company orders. This is all from our side. Now we can open the floor for questions and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Vaidik Sarkar from Unifi Capital. Please go ahead.
Thank you, Shank, and congrats on a very strong quarter. A couple of questions. Could you give a sense of what your executable order book for the next 12-18 months looks like at this point in time, with a split if possible across railways, SCBs, and of course the telecom tower segment?
Yeah, sure. Thanks, Vaidik, and appreciate your call. As far as the order book is concerned, we have leftover of, when I'm talking about the EPC business of transmission, we have a leftover of about 75 crores odd, which need to build from the orders which are already being executed. And on top of that, we have around 280 crores of order book, which we have already won, and the work is just starting on them. Just to mention, we have got a project in Himachal. This was won almost a year back, and the work has just started because the LOI came now. So this is a 45 crore order, which is going to be executed in next about 2.5 years. Looking at the way the Himachal government functions. Then we have got about 2 orders of about 37 crore each for substation. Building a substation and complete infrastructure around it for 37 crores each, 2 orders in Haryana, on which the work has just started. Apart from this, we have got an order in Jharkhand of about 52 crores, which include building of a substation and a few kilometers of line around it. The work is going to be started in another, maybe it might take another couple of months to start because they're going to issue the LOI probably by the end of this month. Then we have an order of 23 crores in Orissa. That's again for substation and some transmission line around it, for which work it'll take another 2 months to start the work there. Apart from that, we have got a project which we have won in railways in Gujarat, which is of 87 crores, which is in the joint venture Sikka Salasar. out of which Salasar has an opportunity to supply structures worth about 40 to 42 crores over a period of next 18 months. So this is what we have in hand with respect to EPC. Apart from EPC, for telecom, we have a visibility of about 100 to 125 crores in telecom towers, which includes export orders of about 5 crores currently in hand. Execution, a project already signed with Nepal Telecom in Nepal for about 14 crores. And an order book from Reliance to the tune of 40 crores, Indus about 20-25 crores, and other operators, other telcos of about 20 crores. So put together, if we say EPC plus telecom I'm giving you a visibility of about 3 to 4 months, because telecom is normally a short-term order book. So telecom is about 125 crores over next 3 months, and these numbers are likely to be repeated by the time these orders are over. And 280 crores of EPC over a period of next 24 months, I would say, to be executed. Other than that, we have quoted for tenders of about 200 crores in EPC, rather 220 crores in EPC, which are under evaluation. And apart from that, we have also quoted for a tender in a new sector, which is road construction. We did not have the qualification, but we took the qualification from Walecha Engineering, and we have, after taking their qualification, we have bid for a road project of about 350 crores. So that's the pipeline in which we have bid for the tenders, and the order book I've given you in telecom and EPC. Apart from telecom and EPC business in railway, for the railway supplies, we have an order book of about 10 crores as in hand, which is likely to increase by the time this order is executed. So I hope I've covered all the sectors more or less. Yeah,
that's a lot of numbers, Shashank. I'm sure I have to get back to you offline to understand that. Sure. Anyway, thanks for that. Just curious. So on the road projects, is it something to do with electrification, or is it a base case, BOT kind of road project?
So it will not be a BOT. It is completely a EPC project of NHAI.
Okay.
And if we win this, the road project has to be done completely. Actually, we have two opportunities over there. One is when you're building a road, you get a lot of opportunities to shift the utilities as well, So we have actually two things in mind. If we are building this road, the business of shifting the utilities will automatically come to us. Whatever transmission line towers are coming on that particular stretch will have to be shifted. So that business will also come to us ultimately. So,
sure, but do we have any prior capabilities in pure road EPC? I'm trying to understand. This is a tactical shift, right? A quantum shift.
Yeah, this is a quantum shift, but see, that's how it works. I mean, when we started building towers, we did not even know what a tower was,
Sure.
So we are basically working on the strategy that, once we get this road project, we have already, internally we have finalized the team, a very experienced team from the existing market players who would be handling this project if we get this project.
Okay. So is it fair to assume that, with the gradual capacity increase of the telecom sector, Salasar's strategic focus would be as far away from telecom as possible?
No. See, telecom is the core. I mean, even this time, if you would see the numbers, they are speaking, telecom is almost 63% of our revenues in this half year, right?
Okay.
And going forward also, I'm seeing good visibility of telecom for at least next 2 years. But at the same time, we would like to venture into other fields so that, we are not totally dependent upon telecom at one point in time, and suddenly, after 3 years, telecom is like, okay, there's no more growth in telecom. So we'd like to place ourselves in sectors where we can continue growing.
Sure. Last question before I get back in queue. Just a sense of your margin profile, between these three segments, starting from road and, of course, railways and SEB, EPC. What's the difference in your margin profile? And I noticed an increase in your receivable days. Is it fair to assume that, with our share gravitating towards general EPC, that will only go up?
See, if I would give you a sense of numbers, today we have about 201 crores of debtors, right? Out of which transmission sector alone is 120 crores, plus minus. So more than 50% is transmission, which includes RE business of about 101 crore outstanding, and plus, and that also includes about 18 crores of retention. Retention is part of the debtors. So if you actually see this 201 crore is, out of this 201 crore, almost 18 crores is retention, which is going to come after a year or so. Plus, Plus, as the case is, the transmission business or the EPC business, there'll always be a case of retention. So that would keep on adding to the debtors, right? Whereas in telecom, we have a outstanding of only 55 crores, 56 crores. Railways is hardly 20 crores. So majority of the changes...
margin profile, please, between each of these three different client segments.
As I'd mentioned earlier also in my con calls and my personal calls with you, whenever you're bidding for a transmission or a EPC project, you try to keep a higher margin profile, considering all the factors that there'll be a retention, there'll be a long working capital cycle. The idea is to ultimately get an EBITDA of close to 11% end of the day. That's the whole idea. So sometimes you're bidding transmission projects at 15% or 14%, which would ultimately give us a EBITDA of at least 11%. And telecom as such, sometimes it is 10%, 10.5%, sometimes 9% also, depending upon the volume of orders. Like if we are working with Reliance, the margin profile sometimes goes down because the numbers are high. They try to squeeze on the prices.
Sure. Thanks, Shashank. I'll be in touch. All the best.
Sure. Thank you. Thank you, Vivek.
Thank you. Reminder to all the participants, to ask a question, you may press star and one. The next question is from the line of Sachin Kasera from Lucky Investment Managers. Please go ahead.
Yes, so just again a follow-up of the previous question. This plan to get into the road construction, this looks quite a bit of diversification. While I understand that, did you want to diversify from telecom, and, it made sense to look into something like an REC project or even into railways.
Right.
But this is an extremely competitive segment, and, we don't have any much experience there, and we have seen a lot of people in the road segment, having burned the finger. Mm-hmm. So, is there a detailed thought process and a risk management assessment that has been done by the management before we have taken a leap into this road construction?
Yes. Sachin, actually, we have really thought over it. I understand where you're coming from. The road construction sector margins are typically at about 10%, right?
Yeah.
But the working capital cycles today with NHAI are good. You really don't have to put up so much of money into road construction today as probably you had to do in a BOT project or a what do you call, a deferred payment, right?
Yeah, I understand that, sir. But, when we interested a lot of people who are either a pure play into the road construction or who have a significant revenue coming from there, there are also a large amount of challenges which are there. And many of these companies today are having a lot of issues in terms of doing the road construction. And, some of them are even very large competitors, they are struggling. And if we end up getting a large project like 60 crores, if anything goes wrong, it can set the company back by 2-3 years,
We actually have thought over it, and we have been cautious in, number one, quoting our tender that we have quoted at a reasonable margin. Number one. Number two, we have tied up with a team who have been associated with some very reputed companies in the road construction sector. And touch wood, if we win the tender, we are sure that we'll be able to complete this job successfully and in full capacity. And on top of it, as I said, there is a thought that, once you get into the road sector, today there is a lot of opportunity for the EPC business for the transmission as well, for utility shifting. That's a huge business, coming in from there. We are already supplying structures to so many companies who are doing road projects. And what do you call? They're buying structures from us for shifting their utilities. So there were two thoughts behind this, that it could be a double-pronged strategy, wherein we can...
but in that case, sir, we could have tied up with some of these companies, wherein, we bid on a jointly basis, that those companies take care of the road construction, maybe just handle the EPC part of the towers and all. And secondly, sir, and I understand that you mentioned that, we want to diversify a little bit from telecom. But then, a more pool would be like railways or the power transmission, where we have seen our size today is very small. Companies like KEC and Kalpataru, today they have reached turnover of between 5 to 10,000 crores just doing, EPC of railways and electrification. And that's a much more related area of field for us rather than into a completely unrelated area of road construction.
No, but see, our focus is, of course, on the railways, as I mentioned. I mean, railways is going to give us a lot of growth. But at the same time, we would like to get into some other sector as well, which would, road building today is probably different from what it was a couple of years ago, wherein you were getting projects only on BOT or deferred payment basis. Today, when you're working with NHAI, the EPC business is, they're more or less done like the EPC business. The payment cycles are good. I mean, I know there's a conception about the road project that, companies who are doing road projects have not done fairly well. But if you go and see the reason behind that, is mainly because they had to burn their money into building the complete project and then, get their monies out of it by offering on a BOT basis or a deferred payment basis, which is not the case in our this thing. And we,
my question is that, sir, we are already into three lines of business, which is the telecom tower, the EPC for transmission and railways, right? And today our size is fairly small. So to add one more vertical for diversification looks a little perplexing, because I believe there's enough opportunity in the free segment itself. That at least we can reach a turnover of 2,500-3,000 crores next 4-5 years before we could think of another diversification. That is it's not that we may not be able to do it, but just that there's so much of scope in the existing three lines of business. Why to add one more scope when our base itself is so small?
No, I get your sense. But we have bid for one project.
I'll maybe take it offline with you and we can have a separate discussion on that.
Sure.
Thank you. Reminder to all the participants, to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Parth Kotak from the Investment Trust of India. Please go ahead.
Hi, sir. First of all, I'd like to congratulate you for the decent set of numbers.
Thank you, Parth.
Secondly, sir, I'd just like to know, is there a difference in the margin when we are supplying railway track electrification to other EPC players and executing directly?
See, when we are executing directly a EPC project, we were basically doing JV, which is Sikka Salasar, right? Because Salasar as such doesn't have a qualification for a EPC job. So there are a lot of items which go into a EPC project which are bought directly by Sikka Salasar. So in case of Sikka Salasar doing a project of railways as an EPC contractor, the structures are supplied by Salasar to Sikka Salasar, right?
Okay.
Sikka Salasar is a EPC contractor there. And as far as the pricing is concerned, the pricing for Sikka Salasar and the pricing for other EPC contractor is the same. And so margin-wise, whether we are supplying to Sikka Salasar or other EPC contractor, it remains the same.
All right. Got it.
Yeah.
Sir, and again the road construction tender and everything. So do we have a capex which is going to be, that has to be incurred in the coming years? Is there any capex plan?
Capex plan with respect to the road? No, nothing.
And in the existing business lines?
In existing business lines, there might be, but not now. Right now, nothing is thought of as of now. So we already have enough capacities which would like to exploit and utilize in next by the year 2019 and 2020 before we actually get into any capex.
All right. And also, sir, you said the steel prices have increased a bit. So, would there be any margin contraction in Q3? Will we see higher raw mat cost in Q3?
See, the steel prices are already at a very high, right? And that has already been taken care by the customer, more or less.
All right.
So I don't see any margins going down in Q3 with respect to as far as the steel prices or the zinc prices are concerned. And as far as my road project goes, I would like to add on that, working capital cycle in road projects today is very good, So execution is slightly easier compared to what it was earlier. Yeah.
All right. And sir, my last question is, do we actually have the visibility in telecom for the next 3 years that the current capex which is happening will continue happening over the next 3-4 years maybe?
No. See, what we have a visibility for at least a year. But yes, the numbers which we can imagine and which are being projected by the industry as such are mind-boggling actually.
Mm-hmm.
Because as I had mentioned in my earlier polls also, there are about 500,000 towers today in India having an average tenancy of about 1.5. So basically we have close to 750,000 points of connectivity. And the call quality today in India is well known to everyone. I mean, the quality call is very bad, and the telcos, the telecom companies are continuously expanding the network so that operators can come in and, improve their call quality. There is a directive from the Supreme Court as well to try to improve the call quality. So a lot of infrastructure is going to be put in first to improve the quality of the calls for the existing number of subscribers, number one. Plus, if 5G is rolled out by 2020, 2021, we're going to need a huge number of points of connectivity. I mean, those numbers are actually mind-boggling. If that happens, I mean, we are really in for a very good time.
All right. Thank you so much. That's all from my side. If I have any other questions, I'll join back in the queue.
Thank you, Parth.
Thank you. Reminder to all the participants to ask a question. You may please press star and 1. The next question is from the line of Kalpesh Koti from Valentis Advisors. Please go ahead.
Yeah, good afternoon, sir.
Hi, Kalpesh.
Yeah, so you said about the size of the road project will be 315 crore.
Mm-hmm.
So what kind of, capex we require to execute it, such kind of project?
See, this will be, if you actually go into the capex side, probably you need some machinery to the tune of about, maybe about 2 to 5 crores. You need a batching plant and some machinery which you actually own. And then some machinery which would be taken on lease for doing certain works. So I don't see any capex, a huge capex in the road project if we get it. And since the payment cycle is comparatively very good in road project, the project will actually fund itself. Once we have taken the advance from the NHA against our bank guarantees, the funding of the project would be done on that basis only. You complete 10% and then you get paid every month. So that should actually fund the whole project, except for the bank guarantees and probably some capex to the tune of 4 to 5 crores maximum. I don't see any huge capex coming in there.
So while bidding, what kind of margin, EBITDA margin you are seeing in the road project?
About 10%.
Which is less than what we are doing, right?
Correct.
Okay. So I think this will be closed by end of this year, right?
To be honest with you, the tender is opening today at 3 o'clock.
Okay.
So we'll know the results by this evening.
So are we looking to have a big portfolio of the road project?
See, it will all depend. I mean, we are going to do this project, suppose we get this. If we do it, And if we see that everything is running well, probably we might get into another project also. It all depends. When you start something new, how your execution happens. I mean, we would not like to bite probably more than we can chew at one time. So we'd be cautious and we'd be patient in taking the projects. I mean, we just not take it to increase the top line. We'll see how this goes. Yeah.
Okay. Thank you.
Yeah. Thank you, Doctor.
Thank you. Reminder to all the participants, to ask a question, you may press star and 1 on your touchtone telephone. As there are no further questions from the participants, I now hand the conference over to Mr. Agarwal for his closing comments. Over to you, sir.
Thank you, everyone, for joining us. And let me reassure you that we are trying to put in our best efforts, take the company to new heights. And we are in for some interesting times with respect to telecom and other infrastructure activities. And I see a good amount of growth coming in from most of the quarters. So thanks once again for joining. And I'm available for any questions and answers if you have to speak to me offline as well. Thank you, everyone. And thank you, Bridge IR, and thanks, Karuna, for your help.
Thank you so much, sir. Thank you.
Thank you.
Ladies